In the highly competitive pizza industry, success is not just about great products. It is also about systems, resources, and strategies behind a brand. So when we ask, is Papa John's taking over the pizza industry? The real answer lies in the data behind the dough. Good day, everyone. We are the Inamo Consultancy Group. I'm Chai, and together with Christine, Mary, Kelsey, and Cheryl, we'll be presenting the internal analysis of Papa John's International Incorporated and subsidiaries. We will walk through Papa John's company profile and leadership, strategic and governance direction, environmental and competitive context, financial and operational condition, and overall business model and resources. To begin, let us first understand the company behind the brand. Kelsey, what is Papa John's really?
Papa John's began in 1984 in Jefferson, Indiana, when founder John Snatter launched a small pizza business with limited capital and a clear strategic focus on quality and consistency. Through franchising, the company scaled rapidly across the United States and expanded into international markets, transforming from a single operation into a globally recognized brand. Its growth has been anchored in a clear brand promise: better ingredients, better pizza, positioning Papa John's as a premium alternative in a highly priced, competitive market. Rapid U.S. expansion through franchising, supported by its 1993 public listing, this enabled the company to scale efficiently. Rather than relying on heavy discounting, it emphasized ingredient quality, menu innovation, and a strong focus on delivery and digital capabilities. By the end of fiscal year 2025, it had grown to over 6,000 stores across more than 50 countries.
But the road was not all smooth, correct?
Yes, Papa John's also faced a major reputational setback during the 2017-2018 leadership controversy involving its founder. That period became a turning point because the company had to rebuild credibility and shift from founder-centered identity to professionally managed leadership. In short, Papa John's is continuously undergoing strategic recovery.
Okay, what is their strategic direction? Are they walking the talk?
The mission statement of Papa John's is appropriate in that it clearly defines the company's purpose, scope, and key drivers, which are quality, service, and innovation. However, these terms are relatively generic, making the statement less distinctive as a unique brand identifier. For their values, it is internally strong because they highlight integrity and people. However, externally, they are less convincing because those terms are commonly used across many companies, and with their past controversies, values like integrity and inclusion must not only be stated but consistently demonstrated. Nonetheless, it remains vague, as the goal of being the best lacks specific, measurable criteria, limiting its strategic clarity.
So the message is clear, but not exactly competitively unforgettable, right?
Exactly. To strengthen the mission and vision of Papa John's, superlatives should be minimized, and the mission should be more clearly anchored in the company's distinct competitive advantages, such as its use of never frozen dough, to enhance differentiation and strategic clarity.
That's right. Anyway, who are the key names shaping Papa John's today?
At the center is Todd Penegor, the company's president and CEO, who also serves on the board. His role is important because it gives him strong influence over both strategy and governance, and supporting him as a leadership team focused on the company's most urgent priorities. For example, Ravi Tanawala plays a critical role in financial discipline and North American performance, Jenna Bromberg handles brand relevance, and Kevin Vasconi leads technology modernization. The company appears stronger in executive depth than it was before. Right now, Papa John's still has to prove that its leaders can translate credibility and operational discipline into stronger market performance.
Wow. Okay, thank you, Kelsey. Now, let's look at the macroeconomic factors affecting Papa John's. Mary, can you walk us through the external landscape?
Sure. Papa John's external environment can be analyzed through a PESTLE framework. For political factors, we have growing nutrition policy pressures, encouraging food service operators to improve nutrition profiles. Second, there is trade and agricultural policy pressure, and these tariffs and import conditions affect input costs. Lastly, since restaurant chains operate across many markets, tax differences in varying states may influence pricing and other business decisions. So, politically, the industry is not in crisis and it is moderately affected. For economic factors, demand for restaurants is strong as U.S. consumers are spending heavily on prepared food outside the home, reaching $1.52 trillion in 2024. However, restaurant inflation remains elevated. Labor costs continue to rise and ingredient prices are still volatile. So, even if sales remain stable, margins can still be squeezed. Since this is the most difficult external pressure, we rated it as moderate to bad. In contrast, the social-cultural factor is clearly good. First of all, consumer lifestyles today strongly favor convenience, and pizza is naturally aligned with that. Nearly 75% of restaurant traffic now happens off-premises. Also, mobile ordering has become mainstream and customers increasingly expect speed, ease, and value. It means mostly choose pizza not because it tastes good. Finally, growing nutrition concerns only put slight pressure to offer healthier options. Overall, this factor creates an opportunity. Now, technological factors are rated good. Digital ordering is now a standard requirement. Customers expect apps, websites, online payments, loyalty systems, and real-time order visibility, which is an opportunity for restaurant operators to increasingly invest in AI and technologies to increase competitiveness. Now, for legal factors or the actual rules of the company must follow, for pizza chains, these include labor law compliance, franchising rules that require proper disclosure, consistent food safety standards, among others. For these compliance costs and reputational risks, we rated this factor as moderate. Lastly, we have growing environmental pressures such as reducing food waste, sourcing ingredients more responsibly, and so on. We rated this factor as moderate because they are becoming too important to ignore.
So, to sum it up, the pizza industry is socially and technologically favorable, but economically, legally, and environmentally pressured.
That's right! And after looking at the broader environment, we can now place Papa John's in its competitive context by comparing it with its two major rivals, Domino's Pizza and Pizza Hut. Domino's is the strongest benchmark for scale and digital execution, with the largest global store network and the top rank in US pizza sales. Pizza Hut remains a major competitor due to its strong brand, broad international presence, and second-place US sales ranking. Papa John's is smaller and ranks third in sales, but its customer appeal remains strong, matching Pizza Hut 79 in the 2025 ASCI Pizza Score and 1 point ahead of Domino's. The challenge now is how to convert the favorable perception into stronger scale, market position, and consistent performance.
Now, let's move on to the analytical core of the presentation. Christine, can you walk us through the analysis section?
Absolutely. For the financial analysis, we examine Papa John through horizontal, vertical, ratio, and dopant analysis. Papa John's revenue grew strongly from 2020 to 2023, but slightly declined in 2024 and 2025. Overall, the 5-year compound annual growth rate is at 2.5%. While revenue stayed relatively stable, net income became much more volatile and dropped sharply in 2025, showing that rising costs and investments weakened profitability. Total assets slightly declined over the period with a negative 0.8% compound annual growth rate, suggesting a linear asset base and continued depreciation. Year-on-year revenue surged in 2021, then slowed and turned slightly negative by 2024 and 2025, reflecting weaker demand conditions. Net income was even more unstable, with large swings across the years and a severe decline in 2025. Profits were sensitive to inflation and investment costs. In the common size analysis, the main issue is margin compression. Even though revenue stayed almost flat, net profit margin fell from around 4.1% to just 1.6% in 2025. To better understand performance, we also look at key financial ratios. The current ratio is about 0.82 and the quick ratio is around 0.69. Normally, a ratio below 1 can signal weak short-term liquidity. But in the quick service industry, firms like Papa John's collect cash quickly from customers while paying suppliers later. While it's not alarming, it shows that Papa John does not have a large liquidity cushion. Next is the asset turnover ratio. which is around 2.38, indicating that the company is very good at using its assets to produce revenue. The debt-to-asset ratio, on the other hand, was about 1.11. This is a major warning sign because it means that Papa John's is highly leveraged and depends heavily on future cash flows to meet its obligations, making it vulnerable during periods of weak demand and other volatilities. Moving on, gross profit margin in 2025 was around 20.7%, meaning the company retains a decent product level margin, but this advantage becomes less meaningful once the OPEX is considered. Finally, the return on assets was around 3.7%, meaning the company generated a little under 4 cents of profit for every $1 of assets. This is positive, but relatively weak compared to previous years.
Great. And how about the DuPont analysis?
In the DuPont analysis, profitability weakened. Efficiency remained strong, but leverage distorted the final return because equity is negative. So, in Papa John's case, return on assets and operating performance are more useful than return on equity. To sum it up, Papa John is operationally efficient, but it is under clear pressure from margin compression and leverage.
Fair point. Now, let's look at how Papa John's creates value.
For value chain analysis, we will be using Porter's value chain. Let's examine the primary activities that create the core value, starting with inbound logistics. Papa John's inbound flow begins with a centralized commissary model and schedule distribution. It has geographically distributed QC centers that control dough, sauce, and other core inputs, delivering supplies to restaurants twice weekly. Next is operations. Papa John's rely on standard procedures, franchise support system, and increasing technology integration. Its operating system is no longer just store-based. It is also platform-based, with ordering systems, franchise coaching, and digital infrastructure. Third, in outbound logistics, the firm's strength is convenience. Papa John's is heavily delivery and carry-out oriented, with more than 85% of domestic sales coming from digital ordering channels. In marketing and sales, Papa John's positions itself through better ingredients, better pizza, and supports this with the national campaigns, product innovation, loyalty systems, and more, maintaining a premium identity while being selective with promotions to protect traffic. Finally, in after-sales service, the company appears stronger in digital engagement and convenience than in formal complaint handling systems. In terms of support activities, Papa John's is backed by a fairly strong internal system. Papa John's firm infrastructure is generally a strength because the company is organized through a coordinated multi-location system, allowing the company to spread major functions. Its leadership team is specialized with formal control systems to guide decisions and manage risk. For HR, the company recruits through job fairs and more, while training employees through the Dough and Degrees program. Although HR currently faces wage pressure and restructuring-related workforce reductions. Its technology development has become especially important because it now supports not just operations but also customer ordering, personalization, and the overall digital experience. Lastly, its procurement system helps maintain quality and consistency through centralized purchasing and approved suppliers. Although, this also exposes the company to supplier concentration and commodity price risk.
Got it. Papa John's creates value through a coordinated system. What then is Papa John's current strategy?
Papa John's current strategy can be described as a franchise-led, differentiated growth strategy, supported by digital investment and internal transformation among others. Again, it had 6,083 restaurants by the end of 2025. 5,608 were franchised and only 475 were company-owned. A major recent strategy is their investment in omni-channel technology, transformation programs, and so on, designed to improve profitability and streamline operations.
Is it working?
Partly, there are encouraging signs, especially in international markets where comparable sales and growth were stronger. Global system-wide sales also showed some improvement. However, North America remains softer and profitability weakened. So, the strategy looks appropriate and directionally sound, but it is still mid-execution.
Now we ask the strategic question. Does Papa John's have the resources to sustain advantage, or is it merely keeping up?
For resources, Papa John's is both tangible and intangible. Its tangible resources include global stores, QC centers, technology infrastructure, and so on, while its intangible resources include its brand, human capital, franchise relationships, and customer loyalty. Under BRIO framework, most of these are followable, but only a few are somewhat rare, so they mostly lead to competitive parity or only temporary advantage. For capabilities, Papa John's is strongest in supply chain, quality control, franchise management, and brand building, which gives it a temporary competitive advantage. However, in digital ordering, training, and cybersecurity, it is closer to competitive party because these can be matched more easily by major rivals.
So, if we synthesize all of this, what is our final internal assessment of Papa John's?
Overall, Papa John's has a strong internal foundations, especially in its brand, franchise system, supply chain, and digital infrastructure. But since most of these are not rare or hard to imitate, they result more in a competitive parity and temporary advantage rather than lasting superiority. So, Papa John's is resource strong, but it is still pressured.
Thank you, Christine. That wraps up the analysis. Now, to better summarize Papa John's business model canvas, let's have Cheryl to discuss this section.
Papa John's business model is the best understood as a franchise-led, digitally enabled pizza system. Let's look at each of the building blocks. Papa John's serves mass-market pizza consumers, as special delivery and carry-out customers. At the same time, the business also serves franchises, development partners, and more. So its model is not limited to end consumers alone. The value proposition is simple, and it is centered on the promise: better ingredients, better pizza. For franchises, the added value proposition is to get access to a recognized brand and operational playbooks to help them run their units more effectively. The main channels include company-owned and franchised restaurants, the website and mobile app, third-party delivery app, and so on. These channels are integrated around convenience and accessibility. In terms of customer relationships, Papa John's relies heavily on app and website-based self-service and loyalty reward engagement. For franchises, the relationship support oriented through training and operational coordination.
So, the relationship is highly digital for customers, but more collaborative for franchisees?
That's right. Papa John's key partners include franchises, approved ingredient suppliers, packaging and beverage suppliers, technology and payment providers, and delivery. Its key activities include pizza making and food preparation, delivery and carry-out fulfillment, franchise support and development, QC center operation, supply and chain coordination, marketing and promotion, and many more. Moving on, the key resources include its brand name and trademark, franchise network, QC center system, ordering app and website, CRM, and so on. To summarize, Papa John's business model is built on strong partnerships, digital convenience, franchise support, and a quality-focused value proposition that serves mass-market pizza customers. Moving on, Papa John's earns revenue from several streams like restaurant sales, franchise royalties and fees, commissary sales, and others. And in 2025, total revenues reached about $2.054 billion with commissary and restaurant sales, which making up the largest portion. On the cost side, major expenses include domestic restaurants and commissary operations, with technology and system replacement costs standing out in the latest fiscal report. In short, Papa John's revenue is driven mainly by restaurants and commissary sales, while its cost structure is heavily shaped by operations and technology spending. To conclude, Papa John's business model is franchise-led, quality-centered, and digitally supported, with strengths in scale, coordination, and brand delivery. But it is also clear that it is dependent on franchise performance, supplier reliability, and digital effectiveness.
And with that, we conclude our internal analysis of Papa John's. For those who would like to explore the full discussion and supporting details, you may scan the QR code shown on the screen. Once again, we are the Inamo Consultancy Group. Thank you so much for your time and for listening. We hope this presentation gave you a clearer understanding of Papa John's internal condition and competitive position.